What is going on, folks? Today we have a sponsored video from Harvest ETFs. I want to thank Harvest for sponsoring today's video. A little while back, before even working with Harvest, I did a video talking about some high income ETFs, and HDIF was a high income fund that you absolutely loved. Well, in this video, I want to do a full overview and do a deep dive into this fund as some things have changed over the past few months. I will include links down below this video for those that do want to follow along, but let's dive on into it. So here we are now at the Harvest website. Again, this will be linked down below for those that do want to follow along. But here we see the profile for HDIF, the Harvest Diversified Monthly Income Fund ETF, And we're going to go ahead and look at a key overview. This is kind of some top level stuff that we should be aware about with this fund. First thing that is to note for our Canadian viewers out there, yes, this is a TSX listed and traded ETF. This is huge for us when it comes to our currency conversions. Again, the ticker is HDIF. Again, we'll see currency Canadian dollar and hedged. I'll actually pop up on the screen what you'd look at in terms of a stock quote. Today trading at about $8.28 per share. Net AUM, so assets under management. Essentially, we could look at the money that is invested in this fund. We see $178 million. So a pretty sizable fund here in the Canadian market. Current yield, let's look at this, 10.26%. You'll notice that the yield number here is slightly different than what I showed you on the website, and that's because the yield changes daily corresponding to the ETF's NAV change on the market. You should notice though that the monthly distributions of 0.0708 per unit, basically 7 cents per unit, that has stayed consistent since the ETF was launched. You can see why the viewers in our last video were so excited about this fund because you were pulling in some amazing yields. We're really going to dive into this in just a moment. Distributions are monthly, and this fund holds 6 ETFs. So this is a multi-strategy ETF. It's essentially HDIF is made up of a variety of other ETFs, which we're going to look at in just a second. But if we go down to this investment objective tab or portion of the page, Harvest Diversified Monthly ETF offers a portfolio of equally weighted Harvest ETFs, okay? Equally weighted. Point that out there. Positioned to deliver steady monthly income. The multi-sector portfolio is comprised of large global companies diversified across key sectors such as healthcare, global brands, technology, utilities, and big US banks. Actually, we're going to look at some Canadian stuff that has been added since that previous video. This ETF is designed to provide a consistent monthly income stream with the opportunity for growth. The portfolio is reconstituted and rebalanced at a minimum quarterly. To generate and enhance monthly distribution yield, this is a key point here, an active covered call strategy is applied to up to 33% of each security held in the underlying portfolio. And this ETF HDIF is what I would consider an all-in-one covered call solution. It involves the income enhancing strategy of covered calls, but not just on one particular area of the market. It is truly diverse. You have covered calls being written on all of these different areas of the market, as we're going to look at in just a second. But it's awesome for investors that are looking to seek high income as well as remaining diversified. If we take a look here at the benefits of HDIF, I basically just mentioned that, but a one-stop diversified core monthly income solution, access to leading large cap equities diverse across sectors and geographies, exposure to powerful long-term growth trends, consistent income yields above the target, at or above the target of 8.5%. This is key. Modest leverage anticipated at initial 1.25 times to enhance income. This 1.25% leverage, I truly do believe this is a very fair way of saying it. It is a modest amount of leverage. Again, covered call strategy enhances the potential income. And here it says zero management fee. Don't be misled by this. There is, of course, a management fee. So I think this is a little bit misleading. Not necessarily, though, because it does say here subject to the fees of the underlying ETFs. So HDIF in and of itself doesn't charge management fees, but each of the funds that we will be investing in inherently do charge their own fee, and we're going to look at that in just a second. But before getting into the actual holdings, I would just like to say a quick thing on covered calls. This is one of the lower risk option strategies that is a relatively easy concept even for beginners to understand, and especially because this fund caps it at 33%. If I scroll up here, 33% of the underlying holdings is what they will write covered calls up to. You do still have great exposure to the underlying holdings and their individual performance, but this 33% cap does definitely generate a lot of yield. In fact, this plus the 1.25% modest leverage does play a key role in how they're able to generate such high yields. And what I really like to point out here is despite all of this, it may sound like a bunch of scariness, this fund sits at a risk rating of medium. Now, to get into the holdings breakdown, let's take a look under the hood and see what we're really investing in. And there's a really good booklet, which you can actually find on their page. I'll also link this down below. I'd encourage you guys to go through it. It's very nice and visual, makes it awesome for understanding the various funds. But what we're going to do is actually just start with an overview here and basically look from the top down. How is this fund invested? And as I mentioned, it is an equally weighted portfolio with 6 different holdings. Last time we talked about this, there were 5 components to this portfolio. Well, over the past few months, they have actually added in this ETF, which is HLIF, the Canadian leaders. Let's go through these one by one just to see what type of exposure we're getting. A percentage of HDIF is invested in HHL, which is their healthcare ETF, growing demand from an aging developed world and richer developing world, plus regular innovations from large cap companies such as Johnson & Johnson, just to name one. HTA is their technology ETF. Huge scale growth drivers for a decade. Companies like Microsoft that are essential to our current world and will be crucial to the new wave of tech, cloud, 5G, blockchain, metaverse, you name it. This again is the new fund that has been added in and does give us more exposure to Canada. And I really love this, the fact that we are Canadian investors. This is their Canadian Leaders ETF. Canada is home to some of the most dominant companies in the world, such as industries like banking, telecommunications, energy, utilities. Few key players have huge market share, significant financial reserves, and long histories of dividend payments. Absolutely, that is the case. They have a global brands ETF, which we're going to talk about in a moment. They do have exposure to a fund that is specifically invested in the US bank, so giving us exposure to the banks of Americas, JP Morgans, et cetera, et cetera. And last but not least, a fund that is so awesome and reliable for dividends and income. It is, of course, a utility-specific fund. So this is a fund that invests globally across developed European and North American markets with companies that have scales in dominant market, companies that have scale in a sector where scale is everything. And that is very, very true. If we do scan up to an upper portion of this page, we will see from a top-down level where our money would be allocated and what the subsector allocation is for the specific fund. We see at the time of filming, financials sits at the largest weighting, 32.6%. Information technology, aka the tech sector, represents about 23% of the portfolio, healthcare coming in at 22%, communication services at 15%, and utilities being the other one that is in the double digits, so 13%. Beyond that, you do see exposure, of course, to energy, consumer discretionary, industrials, consumer staples, but you do see this really start to taper off. Now, I want to go through a couple of examples of these various funds to really make sure you understand the ETF strategy that this fund entails. So if we go back here, well, there's 2 ways to look at it. I already have the tab opened, but we're just going to dive into, for example, this new one, HLIF. New to this portfolio, at least. You can also get there by going back to their homepage. And from here, you can just go over to the portfolio. As we can see, once it loads up, we can see the various ETFs within HDIF. And you could obviously just click on this one. Here we see weighted at 21%, all equally weighted. This will bring us to that exact same page, but I do just have it up on another tab here. But this fund in particular focuses in on Canadian equity income leaders. And by scrolling down, you'll see that this fund has its own profile, if you will. It will be trading at its own price. It will have its own current yield, the number of holdings. And again, by investing in HDIF, you're going to be getting exposure to this along with the other 5 ETFs. But if we do scroll down here to their portfolio, this is probably the easiest way to look at it. We can see that by investing in HDIF, we are inherently getting exposure to 30 Canadian equities within just this fund alone. More details on their market cap, PE, average dividend, etc. This one is going to be obviously 100% weighted to Canada, and a very typical Canadian breakdown with financials and energy being a big part of this, utilities we see as well. But here are just some of the holdings listing from largest to smallest. We have companies like QSR, Restaurant Brands. You have Brookfield Renewable Corporation, Emera, Manulife Financial, Canadian Utilities, Fortis, Hydro One, BCE, the names that you are already familiar with here in the Canadian market. Well, this fund will essentially get us exposure to that. Now, it's important to note if I go back up to this overview page, it's critical to understand the fees that we're paying. And although HDIF doesn't charge a top level fee, if you will, what you'll note is that HLIF, this Canadian Equity Leaders Fund, this fund in and of itself charges 0.65%. So you are paying the fees, but on the actual underlying fund holding, if that makes sense. And as we'll see in the next example, these fees do vary, but this is kind of in the ballpark of what you'd expect. This next one that we can look at is beyond, let's say, the Canadian income stocks. If we bounced over to ticker HBF, and again, you could do this by going back to that homepage. I already have it pulled up here just to save some time. This is a fund that invests in the world's largest and best brand leaders. So this one, if we scroll down, we'll see that it has its own set of characteristics, again, still traded on the TSX. But if we look down at this investment objective, just for example, it is an equally weighted portfolio of 20 large caps from the world's top 100 brands. This ETF is designed to provide consistent monthly income with stream of opportunity for growth investors, or for growth, in order to generate enhanced monthly income. Again, active covered call strategy is engaged. So this one has a core US large cap portfolio, diversified exposure to 20 large capitalization global brands leaders, attractive monthly income, covered call strategy. Okay, we've been over this. What I want to point out here is, again, this management fee for this ETF does sit at 0.75%. So you can go through one by one on your own time, really get to understand the fees that are associated with each of these respective underlying funds. But I do just want to toggle over here to the portfolio tab. And from here, we will see again, the number of equities in this one is 20. Again, if we were just to look at HLIF, which we just covered, plus this, you have exposure to 50 different holdings. Again, these are just 2 of the 5. Details on the dividend, market cap, average PE, etc., etc. If we take a look down into this subsector allocation, we notice that the information technology sector does come in at the highest weighting. And that's what I love about a fund of HDIF, is that you are getting such inherent diversification that you wouldn't necessarily get if you just went out and bought Canadian stocks. We don't have that many technology companies here in Canada. Unfortunately, that's not really our forte. But when you have all these various plays in different areas of the market, well, you do become a very diverse investor. Here we'll see the top 10 holdings of HBF. Again, we could extend this and look at all 23, but these are some of our top tier world-class companies that we all will be familiar with, such as UPS, Shell, Apple, Morgan Stanley, Accenture, PLC, Alphabet or Google, PepsiCo, Bank of America, JP Morgan Chase, and McDonald's. You as an investor in HDIF will be getting exposure to all of these. And one thing that I personally note when looking at a fund like this is it's very fascinating. You have a lot of companies such as Apple or Alphabet, which are not known for paying amazing dividends, right? These are more on the growth side. I think with time, they absolutely will. Of course, you got your healthy dividend stocks like a PepsiCo or like your bank stocks, but this grouping of funds all in one just provides you as an investor with all different types of investments with growth, dividends, you name it. And again, I'm not going to go through every single one here because this video would take, quite a while. But of course, it is important that we at least understand a couple of examples. And I really encourage you to go do this on your own time. But if I were to just hop back to HDIF, the Harvest Diversified Monthly Income Fund, which is, again, the top level fund if you want to look at it that way, I do just want to finish off this video today by talking about their covered call strategy. And I know if you've been following the channel for a while, you've heard us talk about covered calls, either myself, Mark, a number of times. And if you're not subscribed, I would encourage you to do so. But if you are not familiar with how covered calls works, this resource that they provide is very, very insightful. I really encourage you to take the time to go through this, flip through this. It's a nice, easy read, and it'll really help you understand under the hood what is happening and how they're able to generate this additional yield. All in all, in summarizing and wrapping up this video, this is a fund that investors that are striving for income in Canada ought to be aware about. It is diversified. It pays a very nice high yield. It incorporates a covered call strategy across a variety of sectors, which is something that is not easy to find. It is a great solution for income-seeking investors. And again, after you take the time to understand the covered call strategy by going through this template, watching some of our other videos, you'll realize that by writing up to only 33% or capping it at 33% with a modest amount of leverage, this income is still a very reliable source of income, again, ranked as a medium risk fund. It's a fund that we all should be aware about. And as mentioned, I will include links to everything that we've covered today down in the description below so that you can take the time to go do your own research, your own due diligence, and see whether this is a fund that is suitable for you. But I am very happy to be partnering here with Harvest to help provide exposure, to help provide my opinions and my insights on this fund. Again, a fund that I was liking even before we started working together. So it's the perfect mix up here. If you guys enjoyed today's video, do not hesitate to leave a thumbs up. Let me know your thoughts down in the comment section below. If you're not subscribed, subscribe, because we talk about this type of stuff and so much more on the channel if you are just looking to become a better investor. And of course, we do have the Investing Academy, which is down in the description below. You can head over to our website and learn all about what we do with our students all across Canada. But once again, thank you to Harvest for sponsoring this video. I hope you guys enjoyed, and I'll see you in the next video.